Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, October the 4th. Prices are lower here in the feed grains overnight, holding on to slight gains here in the soybean complex. Corn right now about 3 to 4 lower. Wheat prices down 9 to 10 in Chicago and in Kansas City, 3 to 4 lower in Minneapolis. Bean oil, that's up about 20 to 30 points, and meal is now steady to about $1 higher. Bean oil just continues to draw support from higher energy prices as tensions remain elevated in the Middle East. Still awaiting Israel's response to Iran's missile attack here earlier in the week. It was being reported yesterday that Israel was considering attacking Iranian oil fields. Here in the U.S., port workers, the strike has ended, at least temporarily. Workers will have agreed to return to work immediately, having reached an agreement that will gradually increase wages and benefits by 62%. This over the next 6 years. Final details of the contract still need to be hammered out over the next 90 days, where workers could walk out again. However, at least this gets us now through the upcoming holiday season. Speculative traders or light sellers across the ag space yesterday, with the exception of bean oil, where we had them buying about 7,000 contracts. Their short position now is down to only a few thousand contracts, which would be the smallest in 6 months. A day after reportedly agreeing to buy just over 3.1 million metric tons of wheat from Black Sea suppliers, i.e. Russia, Egypt's government has announced plans to alter their flour mix to cut back on wheat consumption by using corn flour or sorghum in a 1 to 4 ratio with wheat. That would reportedly drop their wheat consumption by about 1 million metric tons annually. Yesterday's drought monitor in the U.S. saw a significant drop in drought readings in the southeast and in the southern Midwest. This following the devastating rains last week from Hurricane Helene. Bean areas in drought dropped 4%, a 6% drop in winter wheat areas. However, dryness in the west did see overall corn acres in drought increase 2% and spring wheat up 4%. Outside of just a light passing shower in northern Illinois today ahead of a weak cool front, much of the U.S. Midwest looks mostly warm and dry really through the middle part of the month. Right as harvest is beginning to hit its stride. D's corn down a little bit here again this morning. This after recovering nearly 50 cents off the August lows, likely seeing some hedge-related selling ahead of this weekend's active harvest. But overall demand remains strong. Exports up 14% year-to-date on commitments. This versus USDA forecast with exports only up less than 1%. We'll have our production estimates and balance sheets ready early next week ahead of next Friday's USA production and WASI reports. November beans, they're consolidating right now very close to the 1050 level. That's about 20 cents off the highs here in late September. And that high was about $1.15 off of the low that we made in the latter part of August. China does return from their Golden Week holiday next week. We saw a new 2.5-month high in bean oil overnight, while December meal, that's just clinging to its 100-day moving average support. All three classes of wheat have pulled back here. Looks that after some pretty good gains earlier this week. Tensions in the Black Sea region seem to have eased a little bit here the past 24 hours. I look for the USDA to raise their U.S. wheat export forecast by 25 million bushels next week due to declining production, particularly in Europe and other areas of the world. Thank you for listening, everyone. I hope you have a great Friday and a great weekend.